Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link for that sale is in the description below. Make sure you check it out, and also in the pinned comment. You can get access, of course, to the charts that we'll be talking about in this video, and many, many more. So let's go ahead and jump in. The social risk is a way to sort of measure retail interest in the cryptoverse. And one of the things that we've pointed out before is that during QT, during tightening cycles, etc., the social risk tends to go down. When you get to the halving year, the social risk tends to start to go back up. One of the reasons I think that's the case, it's not just because of the Bitcoin halving, although we'll never really probably know, because the things you have to consider with retail interest and the halving, and does the halving make the difference or is it something else? It's interesting how the halving year corresponds to election years. And in election years, there's going to be pressure, there's going to be political pressure on the Fed to go to more accommodative monetary policy. And when you go to more accommodative monetary policy, it leads to retail being more interested in riskier assets, okay? So that is one of the reasons why you'll see social risk, trend down and stay relatively low, and then start to trend back up as you get further out into, say, the election year and post-election year. So right now, the social risk is coming in at 0.227. So still, in the grand scheme, it's relatively low, right? In the grand scheme, it's relatively low. If you're unfamiliar with what makes up the social risk, we're just looking at trends in subscribers to various YouTube channels, YouTube views on those YouTube channels, and also followers to analysts on Twitter, crypto, people that talk about crypto, exchanges on Twitter, and layer ones on Twitter. And when you look at each and every one of these, you can come up with a risk metric for it. And you can normalize it between 0 and 1, assuming that from one cycle to another, there will be a higher base, right? A higher base from one cycle to another. So you're accounting for the fact that the fair value of the asset class is going up as a function of time, right? Like, we understand that there's more people in crypto in late 2023 than there was in 2019. And there were more in late 2019 than there was in 2015, and more in late 2015 than there was in 2011, right? So that's sort of baked in to the metric, to assume that there's a higher base each cycle. And you can combine all of them into a total social risk to help us understand whether retail is coming into the market or leaving the market. Now, remember, last cycle, the social risk went pretty low. It then popped off the lows, came back down, did not really start to move up until we got to the halving year. Now, just because the social risk is moving up does not mean that price cannot go down. In fact, you could almost argue that that's more likely to make it happen in the short term, right? Because, if a lot of people get pulled back in, then you could quickly wipe those people out to make them think that nothing's going to happen, and then the real move begins. That's what happened last cycle. Could this time be different? Of course, right? But last time, Bitcoin went up, and then it bled into the end of the pre-halving year. It then went up in the early part of the halving year. People got sucked in. It was the halving. It was the next best thing. Everything was going to go up, etc. And then everything crashed. Even though the social risk was already in an uptrend. But the market still crashed. And I think that is the test, right? And it has historically been the test. And we'll see if it happens again. But that is the thing to be on the lookout for, is does something like that play out? But in the short term, the social risk is higher today than it was back in July. So at least a positive development in the social risk, meaning that some people are starting to look back in the cryptoverse, just like they did over here, right? Just like they started to look back in over here. You can see there was a spike in the social risk right here up to around 0.2, in fact. Right now, it's, just above 0.2. It then went down, put in a higher low, and then went all the way up to a social score of 0.372, and then came back all the way down to 0.1, and then back up to 0.38, and then back down to you can see it was forming higher highs and higher lows. Even though Bitcoin was forming lower highs and lower lows. It's interesting because what you really see is that Bitcoin was forming lower highs and lower lows during the same period that social risk was forming higher lows and higher highs. So we had a social divergence, right? Price was going down, but social interest was going up. Okay? So far, what we've had is price has been going up, social interest has been going down. Now, social interest is starting to pick back up. So it'll be interesting to see how this plays out just over the next few months before the halving. Is there some type of divergence in this, or is there not? Now, it might be helpful to visualize some of these different constituents of the risk metric. So YouTube views is one. And I was looking at this and I'm like, well, is there really an influx of new views or not? And at this point, I don't really think we can definitively say that there's an influx of new views. Even though that might sound weird. It doesn't mean that it can't turn into that, but so far, it hasn't really changed. And we'll talk about why the social risk is where it is in a minute. Because you might be thinking, well, how could the social risk be up where it is now if the YouTube views haven't changed? Well, look at the 7-day moving average of YouTube views. We're currently at around 680,000. This is of these crypto channels that you see down here. So in the short term, I mean, we've gone up from the low, from the low 400s to high 300s, but it still hasn't necessarily broken out of this downtrend that we've been in. It might be better visualized with a 30-day moving average, okay? So a 30-day moving average is still, at this point, right, it is still showing lower highs and lower lows in terms of new views in the Cryptoverse. Again, that could change, right? It could set a higher high, but it just hasn't done so yet, right? And until we see that, you can't definitively say that the downtrend is over. It could certainly be coming to an end. My expectation is that the social risk will start to go back up, especially as we get out into the second half of the halving year. Remember, over here, the social risk started to trend up, but it didn't really skyrocket until the very end of the halving year, right? Which is a year from now, right? It didn't really skyrocket until the very end of it. Still a long ways off in terms of when it went up last cycle. That doesn't mean that it has to wait till then, this cycle, to go up. We always could see it spike sooner than that, but it is at least, it is notable to say that we first started a series of higher lows and higher highs for a while before we even saw that move come in. And initially, when the higher lows and higher highs started on social risk, price was in a downtrend. Social divergence, okay? So YouTube views doesn't really look like it's necessarily that different. YouTube subscribers, has that changed? A little bit, but still not convincing yet, right? I mean, if you look at what's been going on over here, yes, there's there's some new people coming in, but is it that different from what we've seen? Maybe a little bit. I mean, you can see there's a little bit more color over here than there was over here. If you apply a 30-day moving average to it, this is what it looks like. So again, it is a move up, still nowhere near what it was back over here, right? If you look at Twitter, this is where it can kind of get somewhat interesting. You look at followers to various analysts on Twitter. There is a little bit more interest now than there has been for at least the last few months. Okay, basically the interest that we're at today is about the same as it was back in May. Okay, about the same as it was back in May and back in January. So, in the short term, it's still an uptrend. Still not anywhere close to what we previously saw. Layer ones. What's going on here? Still not convincing, right? It's still not entirely convincing that anything is necessarily durably changed. It doesn't mean it can't, right? But just to look at a few examples, here's Ethereum, right? Doesn't really look that convincing yet. It's actually been putting in lower highs since August. And one of the reasons might be the Ethereum Bitcoin valuation is bleeding and people are more interested in Bitcoin right now. For Bitcoin, it's kind of where it was. It's kind of where it has been, basically for the last half year. You could look at Cardano, still not much of a change. BNB, not a whole lot going on there. You could look at Cosmos and Polkadot, Litecoin, Solana, Near, Doge, Ripple, right? So on and so forth. So not a huge change in new followers to layer ones on Twitter, despite, the positive price action. I think one of the reasons is because a lot of the positive price action has actually come from Bitcoin. If you think about it, like a lot of the other chains haven't really moved a whole lot. I mean, like, yes, ADA is up, but it's still below where it was earlier this year. Ethereum hasn't, it still hasn't taken out its prior high from earlier this year, whereas Bitcoin did it long ago. Polkadot, yes, it's up above $5, but I mean, so what? I mean, it was much higher than that earlier this year. And so you can't necessarily fault people for not jumping on the bandwagon because, if they've been DCAing some of these things, like they're not necessarily in the money yet. So not a huge change here. So where is the big change coming from? Because if it's not coming from followers on Twitter, and if it's not really coming from new YouTube views, at least, again, not yet, but if this is, again, right now, this is still a lower high. So if this is a lower high, how can the YouTube risk be all the way back up to 0.227, right? It's mostly, the majority component here is coming from followers to exchanges on Twitter. That's where a lot of it is coming from. And you can see it pretty clearly. Like, this is a pretty large spike recently. Now, why is this spike forming? It's an interesting question, right? If you take out Binance, there's still a spike there, right? There's still a spike, although it's not as impressive, right? It's still below where we were just back in August. But you add back in Binance, you can see the spike goes a lot further up. Now look at look at only Binance. There's been a lot of new followers on Twitter to Binance over the last few weeks, arguably because, some of the drama going on there and how all that's going to resolve, okay? So we'll see, we'll see what comes of that. I don't know. But one of the main reasons the social risk is up to where it is right now is because there's just been a lot of new followers to some of these exchanges, right? Like Binance is pretty high up recently. I mean, it just got about 14,000 new followers in a single day. The last time that happened was all the way back during the FTX collapse. So it's been a long time since we've seen, that many new followers to Binance. If you look at Coinbase, not a huge change really, which is kind of funny because, the price of the stock is up a lot recently. But even though, still not a huge change in terms of Twitter followers to Coinbase. And we could go through the list and look at a few others and kind of see, like, some of them are off their lows, some of them are not. Some of them are still negative, right? So yeah, FTX, of course, is just, still putting in negative prints for the most part. Sometimes it gets a positive print, but still mostly negative. So again, a lot of the reason for this recent move higher in the social risk is because of new followers on Twitter and also brief surges in subscribers on YouTube and views on YouTube. Most everything else hasn't really changed a whole lot, or not even convincingly put in a higher high. So the social risk, I think, is interesting because it tells you whether retail's coming in to the market or leaving. So you could look at this chart over here and see, all right, we were putting in higher highs and higher lows in the social risk from December 2018 until October 2020. And then we shot up, right? It was a great trend. People were coming in. We've only just now set a low, potentially, on social risk in September. So I think what we would want to see with the social risk, especially if you think maybe like 6 to 12 months from now, is to see a base form where you're putting in higher highs and higher lows. Okay, because there is a chance here that the social risk has bottomed. Remember, there are no guarantees with these markets. Last cycle, even once the social risk bottomed, and even once it got its macro higher low in October of the pre-halving year, we still had some work to do in terms of being sure that crypto was really going to go into a bull run. I mean, that was tested. It was very much tested over the next 6 months. So don't let your guard down by any stretch of the imagination. And just note that there is a little bit more interest today than there has been, at least for the last couple of months. Okay? Today, the social risk is essentially back to where it was in June. Okay? Back to where it was in June. And what I will be looking for over the next several months is a series of higher lows and higher highs. One of the things to remember is that, and I'm going to work it in, is that when you think about the social risk and Bitcoin dominance, right? Let me just show you this really quick. The social risk goes down as Bitcoin dominance goes up, right? Even over here in 2019, the social risk had a pretty big spike, but it still eventually came back down, right? It did not convincingly form higher lows for a while, and during that entire time, dominance went up. Dominance has been going up since May of 2021, higher lows, which is exactly when the social risk topped out. It's kind of interesting, right? That's when the social risk topped out, is when the Bitcoin dominance bottomed, excluding stables. And so, if this is a shift in the trend, then it means we need to be ready for changes in the outlook on the market coming in the halving year. So in the short term, my view on dominance remains unchanged. I think the dominance of Bitcoin will go higher into the end of the year. But beyond that, I think we have to start to question if the trend will change. Dominance has been in a great uptrend from 38, 39%, and now it's at 53%, and it's probably going to go higher before the year is over. But as we get into the halving year, we must open our minds to other outcomes, especially if the social risk is starting to form higher highs and higher lows. Hasn't done that yet, right? We've only gotten a low and a high. We'll see eventually when it comes back down if it can form a higher low and then another higher high. And even in that environment, even if it does do that, which there's no guarantees, right? But even if it does do that, it still doesn't mean that there's not another macro event that can't take crypto down temporarily, just like we had last cycle, okay? So again, the social risk is an interesting way, I think, to navigate the market. You can color code, I like to color code it over Ethereum. You can kind of color code price action over the social risk and really see up here at these peaks just how high the social risk was. The social risk has been relatively low for a while, but the price of Ethereum has not gone down in kind with it as it historically has. If it does get a drop and the social risk is low, just remember that oftentimes these markets can find significant bottoms on apathy, right, on apathy. So we'll see how the social risk plays out in the coming weeks, in the coming months. Again, my view on all of this is to essentially say, look for a higher low and a higher high. Be prepared for a macro event over the next 3 to 6 months, and be open-minded over the next 3 to 6 months to thinking that there exists an outcome where altcoins start to hold their own a little bit more than they have been. Okay? But remember, sometimes before that phase happens, the market will like go through one more cleanse like it did last cycle. Will that happen this cycle? It's hard to say, right? It's hard to say. The bond market doesn't really seem that happy right now. And it seems like there's a pivot coming by the Fed in early 2024. So there's a lot of volatility that we're going to have to work out, especially in an election year where there's more uncertainty. But that is sort of the game plan for me going into next year, is look to see if social risk is putting in higher highs and higher lows, and if what is the Bitcoin dominance doing in relation to that, and just sort of assess the situation as to if there is a scare in the market, does retail stay, or do they just get scared off again? Because so far since May of 2021, every time something happens, they just get scared and run the other direction. Another interesting thing that's sort of different this cycle than last cycle is that last cycle social risk bottomed in 2018, and what was going on in 2019 was a higher low. This time in 2022, the social risk was not at the bottom. It just kept going down in 2023. So, we still might have to go through the process of putting in a macro higher low first just to get to where we were back on this chart. So you can see there are some differences between this cycle and last cycle in terms of, exactly when it bottomed. So something to keep in mind. Also note that, monetary policy has been a lot more restrictive this cycle than it was last cycle. And inflation has been a lot higher, which could explain why people haven't been as interested in crypto in the pre-halving year as they were, last cycle. Why it's been trending down is because the macro is perhaps a little bit more bleak than it was in 2019, right? We've had an inverted yield curve for a lot longer. The risk-free rate is a lot higher, so it has made some people seek yield elsewhere other than crypto. That could be part of the reason. But I just want people to be aware, the social risk is something that we do have on the website, as well as a lot of other risk metrics. Tons of charts, thousands of charts. Make sure you guys check it out. We have the sale going on still. Links in the description below, and you can use the Cyber Monday code to get $50 off your first month, or 50% off if it's the main tier. It'll be $50, but on the other tiers, right, like 50% off. And make sure you guys check that out. Links in the description below. We'll run that sale for a little bit longer. See you guys next time. Bye.